Hey traders, checking in on the stock market today. So the weakness of the tech sector leading the way to the downside from last week is following through again this week. We've got some inflation numbers to be looking for tomorrow morning pre-market, scouting some bounces, but again, staying patient as the bears are in complete control. So we're in a current market environment where there's a lot of individual sectors and individual names that are in monthly, weekly, daily uptrends right now. And there's a ton of names that are mostly in weekly, daily, hourly downtrends. Some of them are in monthly downtrends, but it's mostly on the weekly, daily, hourly. The point is, there's a ton of names that are going in opposite directions based on the sector that they are in. So we have to ensure that we are conscious of this when we are taking trades. Am I trading counter the trends right now? If the answer is yes, why? And it doesn't mean it's a bad thing. I trade counter trend all the time, utilizing my edge of oversold bounces. But again, consciously aware of that and not just trying to play something bullish because I want it to go up when it's in a downtrend on every time frame. So just be aware of the direction you are trading relative to the instrument's trends on all these time frames. Because if I'm a bull and I'm constantly trying to play the weakest sector right now, the tech sector or semiconductors bullish, there are names coming off of all-time highs in the healthcare sector. There are daily uptrends looking for higher lows. So just keep that in mind. S&P 500 right now, the pullback on the weekly time frame as we are scouting a higher low. We're looking at the retracement size, and it's about 45%. So if we get 50% and beyond, that is when we scout equilibriums. Can we drop straight to a lower low? Yes, it's not the most likely scenario. Can we just go right from here to a higher high? Yes, that is not the most likely scenario. A little more pullback, and the most likely scenario is a tightening weekly range potentially until the next FOMC, which is the first week of May. But I am watching for a weekly tightening range, which means I'm scouting weekly higher lows, but I'm well aware there is zero indication in the short term that these weekly higher lows are being set. So I'm not on a daily basis saying this is going to be the weekly higher low, but I know bigger picture, as I watch these shorter term timeframes in bear control, in the back of my mind, I am aware that I am scouting weekly higher lows. Doesn't mean every trade that I take has anything to do with the weekly. I just know that's a backdrop. The NASDAQ is weaker than the S&P 500 because other sectors like healthcare, like utilities, they're helping hold up the S&P 500. The NASDAQ pullback here is about 55% retracement. So we've given back more of the bounce. We led on the way up. We're leading on the pullback. Same thing, scouting the weekly tightening range. A lot of space still for a higher low. We're watching inflation numbers pre-market tomorrow. Perhaps the market pricing in some of that already. But one thing that's really important as we look for bounces, if you are looking for bounces, we're not extreme on any time frames. I'm not aggressively looking for bounces because of that fact. Now we're getting extreme on the NASDAQ for the first time all day into the end of the day. The 4-hour RSI is down at 23. And so I can scroll back and say, okay, when the 4-hour RSI dips down to 20 or below, we usually see a V-shaped bounce. So if we drop down with a red day tomorrow, a gap down open tomorrow, then I'm more aggressive. I have historical information to be going off of. Doesn't mean it's going to bounce, but it means it's more likely to bounce if I have that backdrop. I have more confidence. Also at that point, because the 4-hour RSI is getting extended, we look for the shorter term timeframes to get extended as well. They aren't at the moment as the hourly RSI has been bouncing and cooling off. But if we drop all night, if we gap down open, we will have multiple timeframes lining up in some extremes. And the 12-hour RSI will be approaching oversold at that point. So again, my aggressiveness playing bounces matches the aggressiveness of bears on the drop. And today wasn't really aggressive for bears. They had nice control. Again, we V-shaped bounced to a new high of the day. Make note of this. This has happened many times in the last few months, more notably with the NASDAQ. If you V-shaped bounce to a new high of the day in the first 30 minutes of trading, and you're in a downtrend on the hourly time frame, if you do not change the trends on the shorter term time frames, you can V-shape, but then you got to go 2-minute higher low and higher high, or 5-minute higher low and higher high. And if you don't, you're going to give the move back. And we've seen it plenty of times where we V-shape, putter around, and then roll over to fresh lows. So that is something that short-term bears look for day trading opportunities. And then the bears just did such a good job where every bounce just a lower high, just rejecting the price. Then the hourly bounce got going. Patient bears were just waiting for an hourly lower high. We knew that's the most likely scenario next time an hourly bounce gets going. And we double topped. So tried to negate the bear flag, double top at resistance, and roll over into the close. Hourly EMA 12 has been resistance for days. If you want to keep it simple, the bears have complete control as long as the hourly EMA 12 is resistance on the NASDAQ future chart here. So scouting a bounce in tech and in semiconductors, but not doing so too aggressively unless we see a gap down open tomorrow. Then I turn on the aggressive meter just a wee bit. Semiconductors down, testing the fear lows, 237.32. Waterfall stair step drop with a lower high every day for 9 days in a row. And again, just considerable weakness. It's the weakest sector that I follow right now. Hourly downtrend is our guide. Tons of space for a daily lower high to be the result of any bounce from here. But keeping an eye out for a bounce off support as we are, again, extended. We're starting to get extended. The waterfall drop is certainly extended. So let's see if bulls try and defend 237 tomorrow. NIO. So NIO was a very impressive bouncer. We started the morning with a bunch of weakness in Tesla, NIO, and NVDA. They stood out as lead bears for various reasons. And NIO went 10% plus after the gap down open and just kept those gains. We have not changed the hourly trend yet, but this certainly tells me volatility is coming in both directions. Or I should say it's here and will continue. Even if we see just hourly pullback tomorrow, that's a pullback of potentially 4%. So keeping an eye on NIO for day trade opportunities. Bulls must set a weekly high or low. This must be an inverse head and shoulders if we're going to see any momentum shift in the Chinese names. Baba is the same. Weekly EMA 12 has to set the high or low here. So it's just added to the list of names that are scouting a weekly high or low. Much different setup than the NASDAQ and the S&P 500, but bigger picture, that's what we're watching for. And if I'm looking for a swing trade, my style, I didn't play the NIO bounce today, but my style is looking for a bounce, selling partial. If I'm in at 18 and I can sell half at 19, I put my stop at 17 break even. And if I want to, I can say that's either the weekly high or low and I nailed it, or I'll stop out and not lose $1. And that is my style of playing short-term bounces with a bigger picture, most likely scenario mindset. I'm less confident that NIO is going to form a weekly high or low than the S&P 500, but I'd say weekly high or low is more likely than not with after today's bounce. XLV, big pullback today. It was a lead bear coming off the all-time high. It was first hourly oversold conditions, a back burner, but it was at the end of the day. I'll take that trade in the morning or midday. I won't take that trade into the close. Doesn't mean we won't bounce from here. It's just not the setup, not the higher probability setup that I'm looking for on an hourly bounce trade. It's going to be very important to me whether or not the bulls maintain the daily uptrend. I have to double check I'm recording. I'm not going to lie. I did it again. I recorded this wrong screen again. This is take two. So anything above 136.45 is a daily high or low. To keep the bulls in control, we know they need to regain the hourly trend back in their favor from here. So this week, shortened week, no trading on Friday, holiday. XLV, does it maintain the daily uptrend? Very important for me regarding the S&P 500. XLF, is this a daily bear flag? Or can bulls save this and set up a weekly high or low? That's very important to me this week. And again, if I'm gauging my probability needle on the S&P 500, the two questions I just asked on these important ETFs are very important. Daily EMA 12 rejection, hourly confirmed a downtrend into the close, but we will need to break 37.66 tomorrow if our daily lower high is going to convincingly be set. So watching close. I was scouting a bearish entry today. I didn't see a spot that I liked, but regardless of whether I'm trading it or not, I'm watching it close. IWM is still very weak. Some individual growth names did well today. And again, it's QQQ and semiconductors And more often than not, growth has been over here with this grouping recently, most notably leading the way up and then leading the way down. So 4 days last week, tech gets crushed, semis get crushed, growth gets crushed. IWM still weak. You can see it's not recovering from that weakness last week. But individual names were stronger, like ARC closed with a little bit of green. Canadian MJ closed at the high of the day. Who else? The biotech sector was not strong. It was weak. So a little bit of a mixed bag with growth. PLTR. So again, bulls bought that dip. And again, if you look at the ratio comparison chart, ARKK divided by QQQ, this shows us that growth, at least ARC, was weaker than QQQ Tuesday, Wednesday, Thursday, Friday, all last week. That changed today. NVDA started to shift a little bit, not as convincingly, but into the end of the day, it held its bounce gains better than QQQ did. I'm watching NVDA for a bounce tomorrow because the 4-hour RSI is at historical bounce levels, or close. We got down to 21, and if you go back and look historically, we bounced at 19, at right around 20, 21. So over the last few years, this has been a bounce point. And we also have a wall of support, 206s to 208s. So I am interested in an NVDA bounce, but I have to see correlation with QQQ favorable for bulls. I have to have that wind at my back. So I'm watching for that to potentially shape up tomorrow. IWM needs an hourly trend change back to the bulls, and then we just scout a daily lower high. So just like the financial sector, there will be many names scouting daily lower highs to be the result of the next bounce, which is why I'm keeping an eye out for a bounce in the short term. You know, Apple was a lead bear today, and Microsoft was as well. We're looking for them to bounce, but there's also plenty of space for a daily lower high to be the result of that bounce. Patient bears are waiting for daily lower highs for swing trade entries. Aggressive bulls are scouting daily bounces. Biotech sector lost the daily uptrend, so rolling over. Weekly consolidation underway, EMA 12 resistance. Again, the only hope for the bulls are these inverse head and shoulders. The Chinese names have these inverse head and shoulders attempts. Some of the growth names have them. Burden on bulls. No indication of weekly higher lows being set in the short term, but I know I am scouting those weekly higher lows. Cannabis MSOS had bullish news with New Jersey starting sales soon for recreational, but gave it all back. And bears have been trained to do that anytime the sector pumps, short it. And it's worked far more often than not, and they will keep doing so, because if it works 10 times and then it doesn't work once, it's still worth it. So bulls, same thing, inverse head and shoulders, we must form a weekly high or low. This is definitely one of the weakest sectors up there with semiconductors right now. Very weak. Some Canadian MJ names held on much better. Again, CGC closing at the high of the day. ACB up at the high of the day. Very different look than some of the US MJ names. Metals, upper wick, not ideal day. Bull break, weekly higher lows are set. So that's a good start to the week. That's now my must-hold level, because if that level breaks, we confirm a weekly downtrend, which would be very notable. So I have some metals positions. They're smaller. There's more wiggle room, but it's based on longer-term time frames. And we still have a 4-hour uptrend here, but just more pullback. You know, where's the confidence? Where's the nice, strong close? Where's the increasing bull volume? Where's the move like we saw back here? We got upper wicks, and the bulls are a lot more timid in the metals these days. But still watching that 4-hour uptrend. Silver is stronger than gold in the short term. Silver leads the way up and it leads the way down. It's pretty much just a leveraged version of gold. So if I'm a metal bull, I want to see silver leading, because that shows confidence, and essentially it's risk on out of these two metals versus risk off when we're pulling back. So it set a weekly high or low as well. Got to keep that 4-hour uptrend. Miners, got to be cautious of a rising wedge. Bull break today, right into a notable pullback. We can break bull from this rising wedge. Strong bull markets break bull from rising wedges. But I need to put up bear glasses on, because I've got bull positions in metals, and I need to be looking what would be a red flag for me. And this is it. This is the red flag that I got to keep an eye on to see if it confirms. Anything above 37.80 is a daily high or low. And CCJ uranium play is also a potential rising wedge. Higher high, but straight into a 5% pullback after a bull spike first thing this morning. This volatility is nuts. Props to those of you who swing trade this. I cannot do it. Way too much back and forth. 15% pullback to a 20% bounce to a 10% pullback. But again, just keeping an eye on these potential rising wedges. The daily higher lows are the most important factor for me, and we are still well above them. And we can pull back 5% and still be in a daily uptrend. Just aware. Oil testing our low of 92.20. I'm watching this 4-hour downtrending support line. Bull's got to show up here if we confirm the weekly downtrend. Every dollar that we drop below 92.20 will increase probabilities that our high has been set for a while. Because if we start weekly consolidation from here, and next thing you know, we're 35% off the high, we can trade in this range for months. Set a monthly high or low, set a monthly low or high. Next thing you know, it's coming up towards Q3, Q4. If we break 92.20 with any follow through and start the monthly consolidation. All right, take 2. I appreciate you watching. Thanks for the likes and the subscribes and all that fun stuff. And we will see you tomorrow. Don't forget to do some good things. Microgreens popping up. Looks like the peas and the sunflowers are taking the longest. Broccoli and salad mix is the fastest. Japanese maples are putting their leaves out. This is a hardy kiwi. Had TheChartGuys Jungle Funk build a trellis fit for a king. It's 16 feet high, and we'll probably put hardy kiwis climbing up that as well. Might as well get some food out of it. The blackberries are prolific enough that you can just cut off the stems and stick them in a pot. I've got a friend who just got a house. Going to give him a bunch of berries.